Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, September the 25th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data ahead of tomorrow's FOMC meeting. We get some good economic data tomorrow as well. Well, actually, crude oil inventories, housing starts. But let's talk about today. We've got the CB consumer confidence here in the United States coming in at 138.4, expected to be 132.2, and last month's number revised from 133.4 up to 134.7. Much better than expected there. We also got here the Richmond Manufacturing Index came in at 29, expected to be 22. So better than expected on that front as well. We saw a couple of those manufacturing indexes coming in a little bit lower, but since then we have seen pretty good economic data out of the Fed numbers. Not super widely looked at. They're going to be looking at that, how that goes into like the beige book and the blue book, which is what the Fed is getting right now. Remember, I talk about watch the Fed or watch the beige book. It comes out a few weeks before the FOMC, but it gives you a pretty good indication as to the data that the Fed is going to see. They get a private number, I think it's called the blue book, and that comes out, and that's what they usually look at right before the the FOMC. Now, having said that, the Fed is expected to raise by 25 basis points, so from 2% to 2.25%. They're destined to overdo it, and they likely will. All right, let's talk about the overall markets. We've got crude oil basically unchanged right now, but as you can see, when we get up into these levels, I talked about it so many times, up into the 70s, we're going to lose a little momentum because it's getting a little overdone. We haven't accepted prices at those levels, and I would expect crude oil to start rolling back over relatively soon. We'll talk about that when we look at some trade setups here in a little bit. But let's talk about the other markets. We've got gold moving higher by about $1.50, again struggling. I mean, this thing is like treading water. Just, the water is on your lips, but your nose is above that 1200 mark. They're really fighting tooth and nail to keep that above. Bitcoin coming back off, not a whole lot of volume here, just a lack of participation for the most part. And then bonds finding a bottom here as we get down to that value area low, really overextended. We're at, in the 70% of the volume trades within here, or 7% of the time, and volume trades within these ranges of these two bars here. And what we're seeing is when it gets overextended down here, you just lose the momentum. I believe that the market's going to come back up. Maybe the Fed is going to make a statement that they're going to hold off a little bit. I would expect to see something like that, maybe a little bit less aggressive with the interest rate raises going forward. But they do have their own balance sheet that they're trying to defend right now. So it's not always necessarily going to be the mandate for the overall economy, I feel anyway. I think that they have something in their heads that they have to defend their balance sheet. But all right, anyway, that's my soapbox. We've got VIX still in the 12, so double digits, good. We got a mixed bag over here in the equities. Actually, Dow Jones just moved into positive territory since earlier this morning. So looks like we're all in positive territory. Dow Jones, remember the last couple of days, the blue chips have been struggling as the NASDAQ was rallying, as there's a risk on, if you will, right now. NASDAQ unchanged for the most part, but this is that big rally I was talking about yesterday in the NASDAQ. We saw a pullback in the Dow Jones. We talked about that early on in the daily market commentaries. Nothing changed throughout the day for the most part. It was a continuation of that. Today, unchanged in the NASDAQ for the most part. It's just not a whole lot of volume or anything else going on right now. And E-mini S&Ps pretty much unchanged on the day. You can see here, we haven't had a whole lot of market movement other than the overnight moves to the upside, and then a flush out of those longs heading into the day's session. So just a pretty quiet day, not a whole lot of directional move going on. It's just pretty consolidated. That could be well ahead of the Fed meeting that people are trying to shore up some positions and hedging up ahead of that. It's the only thing I could really say about that for the most part. All right, now eBay. Remember, this is an eBay trade I had on since last earnings, where I got short some stock and got it put to me. I've been selling calls against it, and now we're starting to really break down. I was expecting a little bit of a better move to the upside or into the 35 handle. We are outside of the value area. Need a bit of pullback here. This breaking this bottom here is really making me nervous. I'm going to wait to the end of the day, maybe make a decision tomorrow. I was hoping coming into this earnings this month that we were going to start seeing a little bit of a push to the upside. We're not really getting that right now. So now that it's made a new low today, I'm going to be pretty close to pulling the ripcord on getting out of this. But a nice rally back late in the day would be very nice for a chart setup. All right, so this is what I was talking about with the oil sector. We're starting to see some weakness in these oil stocks like Chevron and Marathon Oil. So we got a little bit of a toppy pattern looking right here in Chevron, and then, again in Marathon, a bit of a toppy pattern. Not a confirmation yet, but just looking pretty weak. So with that being said, I'm more bearish in oil at these levels. It looks like the oil stocks are starting to feel the weakness, maybe even before oil does. So I'm looking to trade oil to the downside, and I did that with XOP, which is the ETF Oil and Gas Exploration Fund. So we're at a value area high here. I played this to the downside. As you can see, really low implied volatility, which leads us to buying options. And if I'm bearish in buying these, or if I'm bearish for this underlying and I'm buying options because I have low implied volatility, that means I'm looking to buy some puts. So I went into the December and bought the 43 puts in there for $1.78. Now I went out a little bit further on this because that NOV is very close, 5 days to start seeing that theta decay start ramping up. So I decided to go out a little bit further and pay up a little bit more in order to avoid some of that faster theta decay. So I'm playing this to the downside, those 43 puts in there. So looking for it to come back down to the point of control here. That'd be a nice move for me. Finding resistance here, come back down to the point of control here, and that would be a winning trade for me. So that's what I'm looking for in XOP. And that's about it for my trades today. I haven't taken anything off. This is the only trade that I've added. And Thursday, we're going to be doing the long call spread. Some of you guys were asking and wondering, why don't I define the risk on some of these long puts that I've been doing right around these 45 deltas, which follows the rules of my webinars, right? Well, the reason is I have a different setup for long calls and long call spreads and long put spreads. And I'm going to talk about the reasons why I set up my spreads, my debit spreads, the way I do. There's a lot of different moving parts there, and there are specific rules I have for those long calls and long call spreads and long put spreads that I'm going to teach you guys tomorrow. So check that out at protraderstrategies.com. Sign up for that. Love to have you guys there. The more the merrier. I love all the questions you guys have been asking throughout these. I'm not one of those guys that says wait to the end. I want to make sure you're clear of concept. So check that out. And then Friday, we've got a special webinar that I'm going to be joining Steve Primo's educational course. And I'm going to be talking about how you can lower your outlay of money when you're buying these stocks in directional moves. All right. So I'm going to show you how you can limit your margin to almost 50% of what you are accustomed to by using options. So check that out. It's going to be really important. And that's about it. Other than if you can't take that, take it easy.